Hi, my name is Jenna Witherbee. I'm one of the advisors on the team at 401k Plan Professionals, and this is a part of our wellness series. When it comes to your personal finances, it's important to not just wing it, which is why we created the 8 steps to becoming financially well. Today, we're going to talk about step number 3, develop your understanding of credit. And these 8 steps are meant to be done in order, but you can certainly skip around if you're at a certain step or want to focus on a certain topic. But let's talk about credit. Is it a valuable tool for you? Will it get you in trouble? I really think it depends on the person. And I want to give you tools and considerations and get you down the right path when it comes to credit, because I think it can be a very valuable tool for you if used in the right way. So, what words or feelings do you describe when you hear the word credit? I feel a lot of times there might be a negative connotation surrounding it. And I mean credit in the sense of you are borrowing money from somebody else, a different financial institution, you're using a credit card, using some sort of money temporarily that is not yours. So you might be thinking, debt, interest rates, spending, shopping. It may even cause people anxiety. So there truly are advantages and disadvantages with credit. And in step 1, we talked about having an emergency fund, money readily available so you don't have to use a credit card. However, I do think that if used appropriately, credit can be to your advantage. In a lot of instances, it's safer than cash. It is useful in emergencies if you need it. It is convenient for booking things and buying things online or over the phone. And responsible use of credit builds your credit history. But there are disadvantages. And I know there's a lot of studies and a lot of stats behind the psychology of using credit. It can lead to extra spending. You might pay extra for borrowed money. Like in that example back in step 1, there can be certainly irresponsible use of credit. And from a lender perspective, from the bank or the credit card company's perspective, there are the 5 C's, and this is what they use to determine how much credit to extend to you. Most lenders put the most weight on steps 1 through 3, or the 5 C's 1 through 3. Character. Have you used credit before? Do you pay your bills on time? Capital. What else do you own? What is your income? Kind of who are you? Capacity. What other jobs or other types or sources of income do you have? Do you have other debts hanging out there? And then there's credit history and collateral. So what is a credit score? You might be familiar with this. If you are applying for credit, they'll run your score and give you a report, or you might get it in the mail after you apply for something. But this is a number basically that you're assigned, and it's a snapshot of your credit report. It identifies your credit risk to the creditor. And the most widely used credit score is the FICO score. It ranges from 300 to 850, and they kind of weight different categories differently. So number 1, on-time payments, always, always, always important to make payments on time. Capacity used, length of history, and then least important would be new credit and types of credit. Always check the fine print for terms, rates, etc. Sometimes that interest rate can be kind of hidden, and it is not uncommon for credit cards to have interest rates in the upper teens, if not the 20s. You need a credit history before making big purchases. So here's where I think credit can be used for the good, is showing that you have some sort of credit history to get approved for a down payment on a home, to be able to get a cell phone contract, things like that. Some states even correlate credit scores to car insurance rates. Limits are determined largely by your FICO score. The better the score, the higher the limit they're probably going to give you. And just take accountability for this. Only you can repair and maintain your credit. So again, make sure you're paying those bills on time. If you can't, work with your creditor. Let them know. A lot of times they're willing to work with you if they hear from you and they know that you're trying. Negotiate rates. The worst they can say is no. Borrow only what you can afford to repay and understand what contracts you have in place. If your card goes missing, make sure to report that right away and be smart. Don't give out your credit card number over the phone unless you are the one initiating the call and they authenticate you. Shred all documents containing your number. And I think most credit card companies are better about that now, with not putting that out there online or on your statements or anything like that. The consequences of bankruptcy are pretty severe as well. That stays on your credit report for 10 years, doesn't forgive all debts. That can make it challenging to establish new credit going forward. Again, if used correctly, I don't think credit is terrible. I think the advantages can outweigh the disadvantages. Remember the 5 C's, and remember that there is better debt than others. So keep that in mind as you are comparing debt to, say, purchase a vacation or a new wardrobe versus a home. A good credit history and high credit score will give you financial flexibility. So again, we covered establishing an understanding of credit in this video. The next one will be talking about paying down non-deductible debt by creating a budget. Thank you so much for listening. Again, my name is Jenna. I'm one of the advisors on the team at 401k Plan Professionals. Our website and our YouTube channel are always available for you with additional resources. Feel free to contact me, send me an email, give me a call if you have specific questions. Thank you.